the name of Mike Maloney, and he joins us today. Mike Maloney, thank you so much for joining us today on USAWatchdog.com.
Thanks for having me.
Well, you wrote one of the best-selling books of all time on how to buy gold and silver, so I picked a good guy for that. It's a guide to investing in gold and silver, and it's one of the all-time best sellers for that area of investing expertise. You also have the website goldsilver.com, and also you have a new series about training people and teaching people about money called The Hidden Secrets of Money. You've put out a couple of parts already. Part 2, I believe, comes out in the next couple of weeks. Mike Maloney, thanks so much again for joining us today.
Thank you. It's great to be here. Yeah, The Hidden Secrets of Money, we've been working on this for some time, and it's what we try and do is explain economics and monetary history in a very entertaining way. And the mission of Hidden Secrets of Money is to enlighten the world that maximum prosperity can only be achieved through individual freedom, free markets, and sound money. Well, that all sounds good to me.
And it's the hard part is getting people to wake up. I mean, people in my family think I'm, crazy. People, write me all the time saying, I can't get people to wake up. They think their money is sitting in the bank. We have $10.8 trillion on deposit. There's not $10.8 trillion in all the banks. They got $33 billion, according to the FDIC, to back it up. And, you gave such a great, crystal clear presentation about why you should have gold and silver. And you're not talking about trading. You're not talking about options. You're not talking about trading. You're talking about possession of the physical metal to protect you for the coming calamity. First of all, what coming calamity do you... let me back up just a minute. You made some big calls in 2005. I'll just give you a few of them that to the audience here. Said the housing crisis, the housing bust was going to bust. That it was in 2005. That was Nirvana, baby. You said gold and silver would take off. That wasn't doing so hot. It was kind of languishing around the $500-600 mark. You also said the stock market would crash. Well, boom, boom, boom. That came true.
Thanks.
So now let's fast forward to now. And gold is kind of languishing around the $1,300. It was $1,900. I'm sure a lot of people are calling you up and saying, "Hey, Mike Maloney, you're an idiot. You didn't. I bought gold at 1,800, and you're not an idiot." I'm sure you have to fend off that kind of stuff. The stock market, wow, it's all back. Everything's nirvana once again. And the housing market, well, is recovering. What say you?
Well, I'm really a fundamentals guy, and when I see PE ratios at insane levels, that just means that, and then dividend yields at insanely low levels. Still, the lowest levels, the data that Robert Shiller has goes back 130 years. And the first 118 years, according to dividend yields, we've never been in a bubble as big as we are today. And so I wouldn't get involved in stocks at these levels. I think they're insane. And then when it comes to real estate, again, using Robert Shiller's data, professor at Yale University, he produces probably the best data on real estate available anywhere. He's showing that we've come from the biggest bubble in history down to fair value and bounced back into a small bubble, and that is just something that's known as a dead cat bounce. After a major bubble, you have to visit undervaluations for excess inventory to be cleared out, for all the excess jobs that were created in the sector to be cleared out. The excesses need to be flushed out, and they have not been flushed out yet of the real estate market. So I believe that there's a tremendous opportunity coming up in both real estate and stocks, but not until after gold and silver go into their bubble. And that should be one of the greatest bubbles in history, and that's someday in the future. And I got into precious metals in 2002 and started taking positions in gold, and I've just been accumulating gold and silver all the way up. And I don't intend on getting flushed out of this bull market until it reaches overvaluations. And there is, by no means is gold and silver overvalued yet. They are, when you measure it against the expansion of the currency supply, or, there's a whole host of other just general price inflation. There's a whole host of measuring where gold and silver is in its cycle, and it's still suggesting that it's severely undervalued at these prices. And yes, we did receive a lot of flack when people bought in at 1,800, 1,900, and here we are at 1,300 2 years later. I fully expected a pullback similar to the 1975 and 6 pullback in gold, where gold fell from almost $200 an ounce back to $100 an ounce.
74, I did some research on this. It was almost $200, 193. 8 months later in 75, August of 75, 8 months later, it fell down to $103. And it took until 78 until it came back to about $200.
Right.
And that's what you're seeing now. You saw the big drop off from 1900 down to whatever it is now, 13 and change. Had a bad day yesterday, not a great day, but that's
well, these types of cyclical bear markets are necessary inside of a secular bull to flush out the speculative money. There were just too many get-rich-quick people trying to chase gold and silver at the time.
But your reason for buying, when you say you're accumulating physical metal. You're not buying ETFs.
Absolutely, I don't accumulate anything but physical metal. So.
Do you see something ominous coming down, something worse than what's ever happened before? I mean, this is going to be the biggest bull market in gold, according to you, in history, and this could be something, pretty ominous in terms of what's coming up with our currency and our devaluation. What do you see coming that could drive gold up to this biggest bull market, the biggest bubble ever? And then A, and B, what price do you think this is going to hit relative to dollars, if the dollar's even around?
There's this enormous convergence coming. When I was writing my book I started writing my book in 2005, and it took until the end of 2007. So it's 2.5 years of writing, and it was 6 years of research. One of the things I discovered is I'm a believer in waves and cycles. And I took all of the monetary crisis and crashes and so on throughout U.S. history, and I put them in a spreadsheet looking for something that was a wave or a cycle, and something big stuck out at me. Every 30 to 40 years, the world has a new monetary system. We had the classical gold standard before World War I, the gold exchange standard between the wars, Bretton Woods from 1944 to 71, and now we've got the worldwide dollar standard. And when you really examine that, it is developing stress cracks and beginning its implosion. So we're going to have, most likely, a shift in world monetary standard. You see countries all over the world turning their backs on the U.S. dollar one after one very rapidly now. Every month there's another country that does a bilateral trade agreement with China or something like that. This is happening at the same time that we're coming off the largest real estate bubble in history, and the stock market has been in a persistent bubble since the year 2000. So you've got the two other major, and we have the greatest bubble is actually the credit bubble, the bond bubble. That's the biggest bubble, and it's been inflating since 1980 without taking a breath. It's just been inflating. And then we have the fiat currency bubble. I mean, every country on the planet is printing their currency into oblivion right now. So you've got this convergence of things all happening at once. And I think you're going to see something really big between now and the end of this decade. The world will end up on a new monetary system. There will be an emergency meeting of the G20 finance ministers, just like we had at the Genoa Conference in 1922, just like the Bretton Woods Conference in 1944, just like the Group of 10 coming up with the Smithsonian Agreement in 1971. It's just history repeating. But the other transitions from one global monetary system to another were baby steps off of gold. Full backing under the classical gold standard, 40% backing of gold mixed with bonds and other currencies under the interwar gold standard. No specified reserve ratio under the Bretton Woods standard, so it started at 40% and fell to 8% before Nixon took us off of it. And then we're backed by debt now. There isn't really any backing for the U.S. dollar other than and all currencies on the planet, other than the promise to tax our populations in the future. When a currency is backed by bonds, bonds are just an IOU where the treasuries of that respective country is borrowing against the future.
And so they're promising.
That's an excellent point. That our currency is backed by the power to tax.
Right. So every dollar in circulation is a promise to tax you until the day you die.
Oh, very good. So, what do you think? What do you make of this 3%? I don't hear hardly anybody.
Now we're going from nothing back to something. When everything starts to fail, they will be looking around for what worked before. And if we go from just debt-backed currencies back to something where there's some partial asset backing, it's going to be a worldwide, a global financial convulsion, the likes of which we've never seen. And I expect that it's going to affect everyone on the planet. So whether you want to participate in this wealth transfer or not, it is going to happen to you. And you have to just, the people that see this coming and put themselves on the correct side of this are going to do very well. But the masses are not.
What do you think the price of gold relative to the dollar will be? I mean, I hate to ask people that, but people want to know what's the price going to be, which I think either you have it or you don't. Either you have protection or you don't.
Well, I like to measure gold and silver in purchasing power, and when you measure things like the Dow gold ratio or the gold real estate ratio, you see that it should buy at least somewhere between right now the Dow gold ratio is at 11. It was at 2 in the Great Depression. It was at 1 in 1980. In other words, in 1980, the points on the Dow was the same as the price of gold.
800 Dow, $800 gold.
Exactly.
750 Dow, 750 gold.
Yeah, and I believe that day is coming again.
1 to 1.
Well, I think it will actually go to like 1/2 to 1. So I think you're going to see a day where gold's price is double the Dow because we're coming off the greatest bubble in history. There is no time in all of history where paper assets were more overvalued than during the NASDAQ bubble in 1999-2000. And there is no time in the last 5,000 years that gold was as undervalued as 1999-2000. Think about it. For 5,000 years, they've been the predominant currency. For 2,000 years, they've been money. And since 1971, countries abandoned gold as money. It went into a small bubble in 1980, but then a brutal bear market for the next 20 years. So by the year 2000, nobody wanted gold. No country wanted it, and no investors wanted it. Everybody had given up on it. This is the first time from 1971 until now, this is the first time that it isn't connected to the money of every nation on the planet, basically, the currency. And so gold really hit an all-time low as far as value in the year 2000. It's a 5,000-year low, and we're coming off of that, and we're reverting, and it should be one of the biggest reversions in history.
Oh, wow. See, I knew I had you on for a reason. Because, this is the kind of stuff that, bing, Helen Keller water. Anyway, I wanted to talk to you a little bit more about you said unfolding dollar implosion. What's that going to look like to John Q. public that thinks that everything is recovering, quote unquote, that we have a fragile recovery? What is that going to look like, the dollar implosion to John Q. public?
I think you're going to see a lot of sort of the same as what we're experiencing now. The talking heads all tell you that everything's great and we're recovering, and then another crisis happens, and then everything gets great again, and then another crisis that's even worse, and the frequency of those is probably going to become more and more often. And then there will just be something that happens like overnight, and you're going to wake up in the morning and gold will be double the price or many times the price, and there will be this emergency meeting of the G20 finance ministers somewhere on the planet, and it'll be just a repeat of 1922, 1944, and 1971.
Except on steroids.
Exactly, because this is the first time where it's really, the history of it is that we all had our own currencies that were backed by gold in the treasuries of each respective country. Then we had gold and a mixture of either U.S. bonds, U.S. currency, British bonds, or British currency. Then we had all the countries on the planet backing their currencies with the U.S. dollar under the Bretton Woods system, and we were the country that still paid out gold against dollars for any central bank that was going to cash in their dollars.
And now we're on this global dollar standard. So for the very first time in all of history, all currencies on the planet are fiat currencies all at once. And the thing about that is there is no example before 1971 of a fiat currency surviving. And so Nixon, when he severed the tie between the dollar and gold, since all other currencies were pegged to gold through the U.S. dollar, he unwittingly began an experiment on a global scale that was proven to work without fail time after time, thousands of times. It's a 100% failure rate. No fiat currency has ever survived. And now all of them are fiat. So this shift is going to be the most dramatic shift, I believe, in world monetary systems in history. And it's going to be the greatest wealth transfer in history. Therefore, it's the greatest opportunity in history. You know, when I say all this stuff, people get scared sometimes. But, yeah, it'll probably be a sort of a scary event. But if you, throughout all the worst events that have happened, the crises throughout history, that's where the greatest opportunity is.
Well,
so if you
and I want to get back to what it's going to look like. You know, are people going to lose their 401ks? Is there going to be this mad dash? You know, in Poland just recently, they took people's retirement money and said, you don't need that. I mean, I think that's maybe another trial balloon. I mean, that's in the EU. Yeah. You know, are we going to have people losing their money in the bank accounts? The person, you know, a gallon of gas is going to be $12.50. A loaf of bread is $20. I mean, what are we going to? How's it going to look?
It all depends on you know, how long it takes them to stop this event and make the shift. The longer it takes, the lower the purchasing power of the currencies will be. And the more of a crisis it becomes. Like I said, you could wake up one morning and the purchasing power of your dollar against gold, for instance, drops by half or 3/4 or 90% or something. You wake up in the morning and gold is at some astronomical figure. Or they may have just decided the reason that gold is at that astronomical figure is that they've pegged the dollar to gold, and so now the dollar is stable, but you have $10,000 or $20,000 an ounce gold. When I was writing my book, I did a analysis of how many dollars were held by foreign central banks divided by the ounces of gold at the U.S. Treasury, and to get a fully backed U.S. dollar exchangeable to central banks only, so fully backed for that small portion of dollars that exist, it took $20,000 an ounce gold back then. And
wow. So they didn't stop printing money; they printed more.
Yeah, I foresee gold well north of $5,000 an ounce. I think 5,000. The more you study it, the more that predictions of $2,000 or $5,000 gold become absurd. Actually, they're absurdly low.
What about all these derivatives around? We just had this week, I think it was Monday, the USA Today did this story about how, you know, could this happen again? Could we have another financial calamity? And, I'm not a PhD in economics, but I do understand that derivatives are listed on the comptroller of the currency's website, and the 4 or 5 biggest banks have north of $200 trillion, just them. The Bank of International Settlements, the Central Bank of Central Bankers, lists the now total at somewhere in the neighborhood of 630 some odd trillion in derivatives, right, most of which interest rate swaps. They did a whole article. I mean, a front page, above the fold, on the next tip page. They didn't mention derivatives. Could this blow up? Could this be the event that, you've had 90% loss of buying power of your money overnight?
Absolutely. I mean, if they try to the derivatives is a disaster waiting to happen. And if you look at the last crisis that we had, one of the root causes was AIG not being able to cover all of their bets. And they were one of the entities that was bailed out by the Federal Reserve. And they made a whole bunch of derivative bets, and they didn't have the backing to cover those bets. They just didn't believe that they could all go south on them at the same time.
They wrote an insurance policy. They took the premium, and they didn't have any money to pay off the bet.
Exactly,
basically.
And it's an insurance company.
And you expand that by 200 and something trillion. I mean, the leverage is astronomical for some of these banks.
Yeah, well, this is something that does threaten to bring down the entire financial system, and there would be no recovery from that as far as just getting the same system going again. It would require going
onto a new system and wiping out basically all the debts and so on and starting all over again.
So people could lose their pensions. People could have their 401ks locked up, confiscated.
Yes.
People could lose bank money in the banking. Tell me all the things that could happen in this greatest bubble on that end in history.
The IMF has already done a rehearsal for confiscating bank accounts. I mean, that was Cyprus, and you were just talking about countries that have nationalized the retirement accounts
Poland.
in those countries. And yeah, Poland. Didn't Argentina do the same thing?
They've done it in the past, yes.
Yeah, and so we're there are already precedents for this. It probably will happen in the United States if we have a big derivatives meltdown such as you're talking about.
But do you think it could happen?
This is, yeah, I do. I absolutely do. In fact, when Cyprus happened, I normally do dollar cost averaging when I buy gold and silver personally, and so I buy on a regular basis. But when Cyprus happened, I took whatever cash I had left and turned it all into precious metals, figuring that someday something like that could happen here. I mean, it wasn't Cyprus that did that. It was the International Monetary Fund. So it is very likely that it could happen in a major power like the United States or the Eurozone or anything else like that. And I do believe that there is going to be this shift in world monetary system one day, and that could be a very chaotic event. And I've often said that it's dangerous to swim near a drowning man. They can pull you under. And basically our government, or most governments, would be the drowning men in this case. So I believe in personal ownership of precious metals as one of the most private ways of storing wealth. But it isn't just storing wealth or protecting yourself. To me, this is the greatest opportunity that has ever been presented in the history of mankind.
On a big chart. Forget about where it was 19 and down to 13. And I brought up the thing because people say, well, he told people I bought it at 19 and I should. And I just tell people I think it's going to come down to whether you have it or whether you don't. And when the price goes up, or if the price goes way down, you're not going to be able to get it. I mean, China is importing, the most latest figure for the last year or so is 1,000 tons. I think it's 1,000 tons of gold. I mean, China's importing gold like crazy. What happens when LBMA or COMEX cannot or will not deliver any more gold? What happens to the price? And is that day coming?
Yes, it is coming. China has gone from sort of being insignificant when it comes to gold to becoming the world's largest gold producer, and none of that gold leaves China. And they're also simultaneously the world's largest gold consumer now, and so they're smart buyers, I think. What I'm seeing happening in the United States since this pullback is less people buying, and there are a lot of people that as gold rises back up to the level of where they bought at, they sell, thinking that they're getting out of it, breaking even. And to me, this is the huge buying opportunity. The pullbacks are the time to buy
right now.
Well,
silver's doing pretty well. They've sold as many ounces this year so far as they did last year, according to the U.S. Mint.
Yeah. What bothers me, though, is that there's a lot of really big buyers out there. There aren't quite as many of the middle class, and if the middle class doesn't protect themselves, if we end up losing the middle class through this crisis, then they tend to vote very differently if they're impoverished. This is where Hitler came from. It is where Mao came from. It is where there were two hyperinflations during the French Revolution that directly led to the rise of Napoleon.
So they would kill the middle class and they would vote for the liberal or the Democratic candidate. Is that what you're telling me?
Well, they vote for some very charismatic guy that can promise them that if they follow him, he'll show them the way out of this predicament So they promise a lot of hope, and they become a despot. And I just don't want to see that happen to the United States. And there is a huge potential for it to happen if we go through this financial convulsion that I'm talking about, this shift in world monetary system. and if the middle class has no gold or silver, because you're going to see currencies lose a lot of purchasing power, and you're going to see precious metals gain a lot of purchasing power.
How about this? How about this thing with Syria where they look like they're going to put off an attack for a while? If they would have attacked, I guess gold and silver would have skyrocketed. Now we had this little sell-off yesterday, at 20, 30, 25 bucks, something like that. Give me your worst scenario, non-worst scenario. Near term, looks like it's going to be another buying opportunity. Gold's going to go down, I guess.
Yeah, and I consider the news of the day short-term noise in the big picture of things. If there is a financial catastrophe, you can bet that they will be attacking Syria. It really works well to take the public's eye off the ball.
You think that's what they were doing here, pushing for this attack?
I don't know, and I don't actually pay too much attention to it. I sort of look at the fundamentals of the global economy and try and see what I know is that regardless of whether this pullback continues for a while or whether it's already over with and it's up from here, that gold and silver are going to some astronomical places because basically they're doing an accounting of the expansion of the currency supply since the last time they did an accounting. And the last accounting was basically 1980. And so we're making up for all of the currency that's been printed globally in the last 3 decades.
And you're saying that with all the money printing around the world, that the gold is going to have to rise to equal to all, going to get somewhere close to how much currency has been created all around the globe. Is that what you're telling me?
Well, gold is, right now, it's not even double its 1980 price. Silver was $50 in 1980, and it's less than half that. Can you name anything else on the planet that is half of its 1980 price?
No.
They're insanely undervalued because they haven't kept up with the inflation of the currency supply, which causes inflation of prices. Real estate is up tenfold. Gasoline, instead of being 32 cents, we've got $4 gasoline. So everything is many, many times its 1980 price, with the exception of gold and silver. So they need to go a long way to catch up, and they eventually will. This is just, you can't have a commodity that gold and silver are a manipulated market, but you can't hold them down there forever because as you expand the currency supply, the prices of labor and the price of energy goes up. Therefore, the cost of production of these commodities rises. And so as the cost of production rises, if you have something that's manipulated and being suppressed, it becomes unprofitable to produce. Mines get shut down. We're seeing that happen right now in the precious metals sector. Mines are being mothballed at these prices because it's still not affordable to produce. So less production comes to market, making the eventual explosion even greater because there's a shortage that is developing just when everybody wants it. So this is actually a good thing for this pullback is a good thing for precious metals investors in the long run because it'll cause the price to go much higher. If it had just kept on marching up, take a look at a 15-year gold chart, and up until that pullback from 2011 to today, it was just the chart was too perfect. You don't have a market that just marches forward steadily without ever doing some major correction or pullback. It causes too many speculators to get into the market. And so we saw gold go parabolic in 2011, and now it's doing a very nice pullback and correction. This is a healthy thing, and it means that gold will go to a much higher price ultimately, and that the bull market will be extended that much longer. So people have longer time to get prepared for all of this.
Well, one last thing I wanted to bring up, and I want to get kind of dark down the rabbit hole here. I mean, if we do have this parabolic rise in the price of gold and silver, then we're going to have a lot of violence. I mean, I was on a phone today talking to a guy that's never bought a gun, who called me and said, I bought an AR-15. I've got food. I've got water. This transition is going to be rough. He's a smart guy. This guy, lives on a golf course and has a house on an island. And, and I was like, what do you think? And I said, well, nothing will surprise. This is the biggest, this ever happened in human history. I mean, you're saying the same thing that people like Jim Rogers says. It's never happened in recorded history. So, nothing would surprise me. And so how bad could this be? I mean, people are going to be starving. People are going to be, whacking people in the head for a couple of bucks at the gas station. People are going to be, going to the grocery. Is this all the things that may happen in this transition? People are going to be just broke. You have $400,000? No, you don't. You had $100,000 in your bank account? Yeah, you can have $100 a day.
Well, in any scenarios, there is anything that if there's a possibility of something happening, then there's a range of probabilities within the possibilities. And typically it's sort of a bell curve with the most likely scenario being somewhere in the middle. The tail risks is what you want to insure against. On one end, we have that everything goes along just peachy, that things go along just as they are. And then you've got this big financial calamity, and over here you've got the tail risk of the possibility of, there's
Mad
people
Max.
that predict end of the, Mad Max, right, that we're going to be bombed back into the Stone Age, basically, financially. I don't really believe either end. It's going to be something in the middle, but I do have some emergency food that I bought. I don't think that it's, if it's, I've got like a couple of months worth of emergency food. I'm not one of the end of the worlders that's going to buy a year's worth or something like, or more. But I do think that there's the possibility of social unrest, rioting and such for a week or so, and that we could see things like interruption of the food supply, and any city has about 3 days worth of food in it. And so you just want to make sure, and actually some emergency food is actually very inexpensive, and it's something that we added to our product line at our website. So if you go to goldsilver.com, you can see this. It's very inexpensive. It's actually pretty darn good, too. We had a board meeting, and we before we added this product, and we all made lunch out of it, and it was great.
Well,
but I do believe in being prepared, and then hopefully you never have to use these things. These are the insurance for, it's like getting fire insurance for your house. You don't want your house to burn down. You don't expect it to burn down, but just in case you have fire insurance. Well, it's the same thing with emergency food. I don't really make comments on guns other than I also bought one. So.
Well, I'm glad you brought that up. I mean, I lived in Florida for years, and I never really had any extra anything. And when you live in a hurricane center, you get kind of conditioned. Hurricane centers, someplace we get hit. I have enough to make it a couple of weeks, right? I mean, at least that.
Yes.
Right. It's a personal choice, but it's a cheap. What you're saying is this is cheap insurance.
It's cheap insurance. I live in Los Angeles, and we're way overdue for something called the big one, a big earthquake. And if it takes down a whole lot of the freeway overpasses, there aren't enough helicopters on the planet to feed Los Angeles. And so I just think it's very prudent to be prepared. And I don't think that we're going to break down financially to the point where we're actually going to be using gold and silver coins in transactions. I look at gold as not just a protection of wealth, but a major investment class at this point, that it has the greatest opportunity for potential gains in purchasing power of any investment class out there. So I see it as much of a wealth strategy as it is a protection. And there are just these brief moments in the history of mankind where precious metals become simultaneously the safe haven asset class and the asset class that has the greatest potential gains in purchasing power. And you had a month and a half in 1934. You had the 8.5-year bull market of the 70s, and we've got this bull market that we're in right now. And then before that, gold was always connected with the currency of each country. And so when one country would go off of gold and then experience a hyperinflation or something like that, it would happen only in that country. So the opportunities to be invested in the safe haven asset that is also the investment class that has the greatest potential gains, this is a very, very rare thing. And it's actually the most comfortable position to be in, I believe. And so I'm actually liking all of this stuff. I mean, I don't root for financial calamity.
But it is what it is. I want to know what it's going to be, not what I think it's going to be, what I hope it's going to be. What is it going to be? And it ain't looking good. The transition's going to be rough.
It isn't looking good, but I don't worry about it as much, having a bunch of gold and silver and having a little bit of emergency food. I sleep very well at night now.
And one last thing, do you think, and I said this one last thing before, this last question, if you could make it short, be great. Do you think we'll have confiscation of gold and silver, at least in the coin form? A lot of people say mines, yeah, I wouldn't own a gold mine because I think it's going to be confiscated. That's where the big money is. The foreign holdings of gold, hey, we printed all this money, the Federal Reserve, and, we've bailed out the world, so we need your gold.
Okay,
6,000. Do you think they're going to come after people's private individual stocks of gold?
For many years, I was saying that the least likely country to do that would be the United States, because we've put ourselves in a position that's unlike any other country. The United States is the only country where the majority of its currency resides outside of its own borders. Obama and Ben Bernanke, they do not have any control over the currency that is outside of our borders. If Obama signed an executive order today nationalizing gold once again, I think that all of the traders, in Moscow, Shanghai, just all around the world, they'd be going, oh my God, there's something wrong with the dollar. We better get rid of our dollars and buy gold. The dollar would crash to zero within weeks, and gold would go to infinity measured in dollars. And I'm hoping that the powers that be in the United States know that and do not make the choice to try and nationalize. By the way, gold was never confiscated. It was nationalized. They requested that American citizens turn it over to any member branch of the Federal Reserve System, where they bought it from you at full face value. And then they melted it down, put it into bars, and put it all in one spot, Fort Knox, to be safely held in trust for us. So that's the very definition of nationalization. Confiscation, they bash down your door, hit you over the head, and take it from you. Okay. And so it was the precious metals dealers that use that word confiscation are usually trying to scare you away from bullion into investing in numismatic, overpriced stuff where they can make a huge profit. Anyway, I do think, though, that as things get out of control, that there is that possibility. And so I've started buying bullion jewelry as something that we offer. It's very low-priced jewelry. I can't find any example in all of history of a nation confiscating the jewelry of its citizens. It does confiscate coins and bars, or nationalize, I should say. But they don't nationalize jewelry. And so
you're saying they might nationalize private holdings. I mean, I find it hard to believe that they're going to sell you a gold eagle since 1986, and then all of a sudden say, yeah, you need to turn that back in. Yeah, we sold you. That was a mistake.
Well, that's exactly, though, what they did with during the nationalization in 1933, Roosevelt's nationalization in 1933, they were recalling all of the U.S. gold coinage.
But that's back when we used it as a $20 gold piece. I mean, now that people are buying gold as a bullion, it says $50 on it. It's not worth $50, worth way more than that exponentially, $1,300 and something, right? So yeah. I just find that's going to be a hard case for them to make. They may take Krugerrands and Maple Leafs and bars, and I just think, what do you think about that?
Of the gold that I own, about 90% of it is gold American Eagles, and 10% of it is this gold jewelry that I'm talking about. And then with silver, I've been purchasing American Eagles. That's about 99% of my silver holdings. So
you think the same thing I do, that'd probably be the last thing they confiscated, the issuance from the mint. They're going to pull all this back, and it's not even currency? Yeah. I find that really difficult politically.
Well, if they did nationalize gold once again, it would probably be under a circumstance of a hyperinflation, where they don't have anything to lose by it anymore. And at that point, most of the wealth transfer, if you bought in now, most of the wealth transfer will already
be done. So you just sell them the gold, you take their stupid currency, and you buy something tangible with it as soon as possible.
Yeah.
I don't advise anybody becoming a criminal over this. Whatever the laws are, obey them. But, try and turn things to your own advantage as much as you can. And that means getting in on it now. And if it does get to the day where they nationalize gold once again, it would be under these extraordinary circumstances, I believe. They're not going to do it now while they could crash the currency. If the currency is already crashing and they have nothing to lose, yes, they could.
But not now.
Right.